Do you know that multiple time frame analysis is the most efficient way to analyze gold? My name is Vasily, I'm an expert in multiple time frame analysis, and in today's video I will teach you how to analyze gold with multiple time frames. And watch this video until the end, because at the end of this video I included real trade example with entry, stop and target. Traders, please don't forget to like this video, subscribe to my YouTube channel, and let's start. Start your analysis with the daily time frame. On a daily time frame, your first task will be to analyze the market trend. And there are three states of the market trend. The market can be bearish. In a bearish trend, the market sets lower lows and lower highs. The market can be bullish. In a bullish trend, the market sets higher lows and higher highs. And the market can consolidate. In a consolidating market, the market sets equal lows and equal highs. And here's a tip for you. In order to identify the market trend, easily draw these significant impulse legs. Just follow the market and underline the most important legs of a move. Once you do that, simply check whether the market is bullish, bearish or consolidating. Here in gold, obviously the market is currently trading in a bearish trend. We can spot that here the price sets multiple lower highs and lower lows, so we make a conclusion that gold is bearish. After you identify the market trend, your next task will be to identify the important key levels. In a bearish trend, key resistances will be applied for catching the trend following moves, for catching the bearish waves, while the key supports will be applied for pullback trading. When you are looking for key levels, simply analyze the historical structures that were important for the market participants in the past. For example, that horizontal support right here, that is a very significant structure. You can see that 2 times in a row from that structure we saw 2 very strong bullish reactions. So we can assume that in future from that structure we're gonna see a bullish movement. Then checking the historical price action here, we can spot that we had a very important support, and that support was broken. And after the breakout, that support turned into a very strong resistance. Bit higher over here we have one more support that was broken, and again that support turned into resistance after a breakout. And let's pick one more. Here we have a very wide and strong resistance. You can see how that resistance was respected in the past and how nicely the market dropped from that resistance just recently. Traders, don't miss a big autumn sale, 40% off on my premium group. It includes the access to my daily live streams, lifetime access to my VIP signals group, my ebook and video course. For more details, check the link in the description below or text me in one of the social networks. I will give you more details. Don't miss your chance, traders. So here we spotted 1 key support and 3 resistances. And because gold is trading in a bearish trend, from that support we can look for a pullback trade, while from this resistances we will look for the trend following movements. Why do we need to analyze the key levels? Remember that no matter what is the market trend, we will only trade from key levels, because key levels for us are the safe points to look for trading opportunities. Back to gold chart. You can see that here the market perfectly tested the key level. The key level was reached, the key level was tested by the price. So once you spot the test of structure, your next task is to look for the patterns on a daily time frame. You should look for the reaction of the price to a key level. Zooming in the chart, we can analyze the candlesticks. You can see that gold was under a strong bearish pressure. The market was very bearish, but closer we were to our horizontal support, weaker was the market. You can see that if initially the market was forming very strong bearish candles, it started to slow down once that support became close. And then finally, after the test of that structure, first we formed a doji candle, and after that we formed a bullish candle. And take a look, traders, that is the first bullish candle after so many bearish candles. It tells us that that support is still relevant, still significant for the market participants, and we see the willingness of the market participants to buy from that structure. After you analyzed the daily time frame, your next task is to analyze the intraday time frames. And the first intraday time frame that you should check is the 4-hour time frame. Your task on the 4-hour time frame is to analyze how the price reacts to the key levels that you spotted on a daily. So we spotted a key daily support. So on a 4-hour time frame, you should look for bullish clues. You should look for bullish confirmations. And what exactly should we look for? We should look for very bullish patterns. We should look for bullish candlesticks, but you should look for bullish price action patterns. And zooming in the chart and checking how the market was reacting to that support, we can spot here a very nice high momentum bullish candle, the imbalance. You can see that with that bullish candle, with that single bullish candle, the market easily engulfed many preceding candles. That is the sign of the presence of the big players. We saw the willingness of big players to buy, and for that reason the market forms such a big and strong bullish candle. What else can we find here? We can also find here a very bullish pattern. We have here a perfect example of a double bottom pattern, classic bullish reversal pattern. And we can spot that the market violated the neckline of the pattern, giving us a very strong bullish confirmation. And I see one more significant bullish confirmation. We can spot that the market was trading within that falling wedge pattern. And as you know, the falling wedge pattern is the indication of the exhaustion of the market. And again, you can see that with this bullish imbalance candle, the market violated the resistance of the wedge. While you can see that that resistance, that falling trend line, was the resort for the sellers to sell from. Sellers were selling from that, but that violation, that bullish breakout, tells you that sellers lost confidence in that trend line. 4-hour time frame gives you more than enough bullish confirmations to buy. And of course, I will show you how to buy the market with entry, stop and target, but also do not be lazy and also check hourly time frame, because hourly time frame can provide even more important clues. What else can we spot on an hourly time frame? Here I spotted the channel, the falling channel, and take a look, traders. Here is our falling parallel channel, and you can see that with this bullish movement, the market violated the resistance of that channel as well. So both 4-hour and hourly time frame are bullish. So now we are ready to buy. How to buy exactly? Basically, you can buy any pattern that you spotted. You can buy the wedge, the double bottom on the 4-hour time frame, or the channel. But for the sake of the example, I will show you how to buy the market on a 4-hour time frame. First, you should identify the best entry point, and I always say that the best and safest entry is always on a retest. So here in that example, our best entry will be the retest of a broken neckline of that double bottom, because now that neckline turned into the intraday support. So buying from here, we then should set our stop loss. We should know where we become wrong in our predictions. And we become wrong in our predictions if the price violates that key daily support. Yes, that support is the resort for buyers to buy from. So our stop loss should strictly lie below that. And then where will be the target? Your target will be the closest strong resistance. So you just look left at structure and you look for the closest strong resistance on a 4-hour time frame. Here is your closest strong resistance. That is a very strong structure that should be taken into consideration. So your target is simply a little bit below that. So that is your perfect trade for gold, the trade with the confirmation. You just set your buy limit order on a retest And here will be your plan. To analyze and trade gold with multiple time frame analysis, first start with the daily. Analyze the market trend, analyze the key levels, and wait for the test of one of the key level. Then analyze how the price reacts to that. First, on a daily, look for the patterns, analyze the candlesticks, and then check the intraday time frames. On a 4-hour and hourly time frame, look for confirmations. And once you spot strong, valid confirmations, only then you can trade. Читайте, let me know in the comment section if you want to see more top-down analysis videos for gold. Also, do not miss a big sale if you want to learn how to trade gold. Join my trading academy. The link in the description below. It is now 40% off discount, the autumn sale. Cheaters, thank you so much for watching, and I will see you soon.